Swing trading versus day trading. What's the difference? Day trading means that you open a trade and close the trade in the same day. It can be 10 minutes or it can be 3 hours, as long as you open and close the trade in that same day. Swing trading is very different because typically you're going to hold it at least overnight up until it could be months, it could be weeks. I wouldn't consider a year's swing trading. I would consider that more investing. But I want to show you guys a couple examples of the difference between swing trading and day trading. So here we're looking at NVIDIA. We're on a 4-hour chart. And let's say that you see this $100 level as support, right? You think that when price gets around here, it will bounce and you want to capitalize on this bounce. As a day trader, you can take intraday moves as either support or resistance. So let's just say right here, price is below. As it approaches this $100 mark, you can get short through shorting the shares or through buying puts, expecting price to reject off of this. Now, this is intraday, so you're going to close it at some point throughout this session. If you hold into the next day, which would be right here, that would be swing trading. So pretty much day trading, you open and close in one day. Swing trading is, if we go to the 1-hour chart now, you believe that there is a lot of demand, a lot of buying happening over here, and you want to enter into a position, not necessarily with one entry, but it can be multiple entries, looking for price to bounce off of this $100 demand area. And demand just means that there's buyers, there's a good valuation here. This is actually a great example of there being clear demand as price comes into this area. So I don't want to get into the technicals of this, but you can see last time it approached 100, it bounced up. So now as it's approaching 100 again, you can expect another bounce up. Now, the difference of swing trading is that you're holding up and you're riding a longer move. It's more trend trading. It's more continuation trading because in this case, you want to capitalize on this move and the continuation higher. So there is no real area there's no time limit, but in this case, holding over the course of, in this case, 90 days, roughly 3 months, this is a great swing trade. If you were to buy calls down here for later in the year expiration, or you were to even buy shares here, looking for that continuation to the upside, this is what swing trading is. So two of the psychological levers that you really have to think about are day trading. You open and close in the same day. You don't have to worry about anything overnight. You don't really have to worry about news too much, any overnight news. You don't really have to worry too much about like macroeconomic data or news because you're in and out within an hour or 2 hours. If you're swing trading, you do have to think about that. There is the aspect of going to sleep. So some people don't like to sleep with open positions because if there's a big gap down or whatever else, then that's not really great. So in this case, here's a great example of a really big gap down of roughly 12% on NVIDIA. So if you were long here, this is something you have to worry about as a swing trader. It's not, it's not the end of the world. That is, you probably would have gotten stopped out there, but the idea is that you can capture much bigger moves with swing trading, and obviously the hold time is going to be longer. Whereas day trading, you're not going to catch as bigger moves. Like in this case, you would be up $60 a share. Obviously, that would never happen on an intraday move. So boiling it down, day trading, you're in and out in the same day. You're going to catch smaller moves. You're going to get more trades in. And swing trading, you're going to hold for longer periods, a couple of weeks, a couple of days, a couple of months. And you can catch larger moves. You don't have to worry as much as a swing trader of these smaller moves. And psychologically, I think it is important to really accept the fact that there will be intraday fluctuations like there are here. But overall, swing traders will catch bigger moves. There is no one answer that's better. It's just about what fits your personality and how often, honestly, you can just be at the screens. So if you have a job that requires you to be at that actually doesn't allow you to be at the screens all day, maybe swing trading is better for you because you can enter, you can set your profit targets, your stop losses, and just leave it. So yeah, that's the breakdown of swing trading versus day trading.